Euphoria about the Fed softening its monetary policy is ebbing away. Now stock markets have to digest more comments by Fed's policymakers, searching for balance between the good feeling, optimism and risks. The economic calendar is empty as usual on a Monday, and the US dollar is extending its weakness today. For a start, let's sum up the results of the last week. Despite the volatile session on a Friday and a mixed closing of the major indexes, Wall Street finished the week with gains for 7 weeks in a row. The S&P 500 completed the longest winning streak since September 2017. And the Dow Jones logged the longest weekly gains since end 2018 and early 2019. The S&P 500 closed the turbulent session on a Friday almost flat. The index inched down by 0.36 points or just 0.01% to close at 4,719 points. The major stock indexes traded cautiously in the New York pre-market. Futures on the stock indexes traded mixed, and the Nasdaq remained under pressure, having shed 0.05%. The Dow Jones and the S&P 500 added 0.1%, and the S&P 500 is expected to trade in the intraday corridor between 4,700 and 4,745 points. If the index leaves its borders, it could either slip to 4,680 or grow to 4,770 points. The euphoria about the dovish reversal in the Fed's policy is coming to an end after New York Fed President John Williams confirmed the central bank's aim to bring inflation down to the target 2% rate. Like his dovish colleague Austin Goolsbee, he warned the market from extra optimism and premature because there is still a strong likelihood of a new wave in inflation. The bitter aftertaste following remarks by Fed's policymakers offset falling yields of the US Treasuries. However, the indexes could not find a balance by the end of the volatile session, and the sectors sensitive to interest rates, such as the property and utility sectors, incurred the heaviest losses. Interestingly, the trading volume on US stock exchanges was a high on a Friday. 19.76 million shares were traded, much higher than the average volume of 11.80 billion. The S&P 500 jumped by nearly 15% from October's low, and the index was surged by almost 23% this year. All in all, the benchmark stock indexes is on a track to close the year at historic highs. On Monday, the market remains uncertain sentiment. Futures on the US stock indexes are drifting higher because yields of US Treasuries again went down. Atlanta Fed President Raphael Bostic has already repeated the message of his colleagues and said that he does not expect any rate cuts until the third quarter and only 2 rate cuts for the entire year. Yet market optimism can be suppressed. But it's difficult to contain. The macroeconomic calendar on a Monday is empty, and the rest of the week is not full of events. The market's main focus will be on the PCE price index and the Fed's favorite inflation indicator. Besides, traders will have to evaluate weekly jobless claims, US housing starts, and the revised reading of the third quarter GDP. Personal consumption data on a Friday is expected to show that prices fell slightly in November compared with the same period last year, and this can give additional impetus to the market. For now, sentiment revolves around bonds. The yield on the 10-year Treasury note fell below 3.9% on a yearly Monday, but later recovered to 3.92%. Some investors believe yields will continue to decline, and the rapid decline in yields is already weakening financial conditions, making it difficult for the Fed to cut rates next year without risking a sharp return to the inflation. Nevertheless, Goldman Sachs upgraded its forecast for the S&P index to 5,100 points by the end of 2024. Among individual stocks, Apple shares dropped by 0.7% in a pre-market trading after Bloomberg reported that more Chinese agencies and state-backed companies are asking their employees not to bring iPhones and other foreign devices to work. The currency market is trading cautions after a roller coaster of the last week. Popular trading instruments are hovering in tight ranges, and the US dollar index went lower in a negative territory. The index skidded by 0.17% before the opening bell to open the New York trade at 102.40. The intraday corridor for the instrument is determined between 102.38 and 102.60. If it leaves their borders, the price could either test the level of 102 or climb to 102.90, which is unrealistic today. The US dollar index started the week with slight fluctuations, trying to recover from last week's crucial defeat. Note that the index recorded its largest weekly decline in months, which is not surprising given the dovish turn of the Federal Reserve, and the US dollar's position is shaky because European central banks have maintained a tougher stance. No matter how hard the Fed speakers try to cool the market's zeal in their latest speeches, they have so far failed to do so well. Tomorrow, the Bank of Japan will be in the spotlight with the results of its meeting. Despite various statements by the Bank of Japan's management, analysts do not expect changes in the direction of a tightening monetary policy this week, but the outcome of the meeting can definitely breathe life into the currency market again and potentially support the dollar. The Canadian dollar is extending the winning streak. Intraday, the USD CAD pair traded 0.17% lower at 1.3358, and the intraday corridor is outlined in the range of 1.3320 and 1.3380, and the fundamentals for the loonie's strength today are favorable. The greenback is falling, oil is adding about 2.5%, and the Bank of Canada made it clear on Friday that interest rates would not be lowered in the near future. The Fed is going to do what they need to do, and we are going to focus on what needs to be done here in Canada, said Governor Tiff Maclean. For the policymakers, the talk about monetary easing is not relevant now. We have not started a discussion about cutting rates because it's too early to discuss it, and we are still debating whether we've raised interest rates enough and how long they need to stay the same. Obviously, this is an encouraging speech for the Canadian currency under such conditions. Optimism today can only be a dream for the cryptocurrency market. Digital assets today are rapidly sliding deeper into the red zone. By the opening bell in the United States, Bitcoin lost about 1.5% in value, dropping to $41,350. Ethereum fell by 3.6% and Binance plunged by 9.8%, leading the decline among top altcoins. And this is how the market reacts to the SEC's latest statements. Even Coinbase's lawsuit against the Commission for refusing to take into account the community's petition discouraged traders. The crypto firm wants the court to order the Commission to develop a legal framework to protect cryptocurrency investors and promote innovation in the United States. And against this backdrop of internal drama and confrontation, the trading range for Bitcoin is outlined between $40,800 and $41,400. Going beyond the borders can lead the bears to retest $40,600. If the buyers outwind the level, the token can regain $41,790. You have watched a review of the US markets. Ask any questions in comments. InstaForex analysts are open for your feedback. Subscribe to our channel and share your viewpoints. You'll keep you updated on the recent market developments. Good luck and see you online tomorrow.